That's you know what the hell are you thinking? Your life as a young keeps a daylight blinking. Chicks. The tree never dies. He's gonna burn lights and flying high. Here's my favorite part. One of my favorite parts. Even gravity can pull you down. That's you know what the hell were you thinking? This guy. Alrighty. Let's get the ball rolling. Let's go back to there. Let's go back to here. Let's do this for a second. Hold on. Oh, I gotta get that one out of there. All right. I don't know what the hell's going on there, but alrighty. All right. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for a simple, safe, predictable, consistent 1% per week. Yeah, I know 1% doesn't sound like a lot, but here's the thing. I'm perfectly okay with 1% because 1% every week comes to over 50% by the end of the year. And I'm perfectly okay getting a 50% return on my money. But that's me. I could be wrong. You never know. Colt, how you doing today? Nice to see you there, Mr. Colt. Who do we have in the house? Ooh, I got to fix these, don't I? Fix that one. Go like that. That works. Fix this one because it allows me to. One of these days, I'll figure out that Yahoo one. Figure that one out. Okay. Who's in the house? Who do we got? We got GMK, Robbie, Len, Ron Burke, Nick, Jeff, Jonathan. How's it going, Jonathan? Thomas, fruit vendor, no. What should I do when all my stocks are going down? Len, dude, hate to be the bearer of bad news, but misery likes company. Funny thing is, I have a count. Every single stock in that particular account is down at least 15 to 30%. So I'm in the same boat you are, but I'm not panicking. Sit tight. Kava. Okay. Russell, Bryn, how you doing? I'm gonna get there in a second. Hold on. Hope that helped out a little bit. B cells, Clint, Astrid. Mama's in the house. Ches, Salvador, Marvin, Adrian, DJ Flawless. What's happening, brother? Daniel, Seth, Joey, Dapper, User, VA, Plowboy, Lake and Finn. Okay. Joe, Mark, Champ. Jan, Frank, Nunatary. What's happening, Nunatary? Who do we have over here? Over here, we have Ronald, Aldrich, Owen, Thomas, Scheit, okay, ASA, DJ O'Neill, JB, Eric, James. Can we take a look at BBY? Yes, we can. Let's pull it up first. We'll take a look at that one after I say hi to everybody. Jonathan, Ramid, Luis, Robin. How you doing, Robin? Freaky. What's happening, Freaky? Mia. Am looking for a friend with whom I can share. Okay, you're just going to leave that one alone. A little disturbing. Oscar's house. What's happening? Luis Juarez. Good to see you again. Bonjour. No, wait a minute. Who just snuck by? Someone snuck by. Oh, Blue 420. DJ Flawless. GD. Oh, today's Palm Sunday. Didn't even know that. Cam, how you doing? James Stevens. All right. Bofu. Okay. Ligma, Freddie Reddy. Anki. Anki. I know. I heard that name before. All right. Who do we have over here? Arnold. What's happening, Arnold? Nader, what's going on? What else do we have? Nader. A lot of respect, sir. Not many people share real knowledge. Thank you, dear Mr. Nader. Nicotine enjoyer. All righty then. You enjoy that. Who do we have over here? Russell, Kara, Liam. What's going on? Miley. All right. So down here, buy the dip or not tomorrow. Hold tight. Colt, I see you there. Strange change. Can you stop making your head and breaking eye contact? I'm almost finished. Sorry? Charlotte, Logman the man. Do you like to party? When I was younger, dude, not anymore. Jesus is king. Jesus loves you. Okay. Buy the dip or not tomorrow. Zoster, we'll take a look at that. Esther, how you doing? Luke thinks that's funny. Buddy is not trading, not a trader. Oh, nicotine enjoyer. Hold on, sit tight for a second. Oh. Cam, James Steven, summary. Okay, nicotine enjoyer. Buddy is not a trader, laughing my ass off. Oh, cool. What's an iron butterfly, Mr. Trader? Oh, isn't VWAP the best two for entries? VWAP. Okay, good question. Mike S., what's going on? And who else do we have over here? Okay, user gold to 2025. Okay, cool. Well, good evening, everyone. Nice to see everybody. Nice to be, hey, Dana, see you there. Colt. Thank you there, Mr. Colt. All right. Peaks and valleys. Thank you. Fillinge Tom. Okay. All right, let's get the ball rolling. So, as I say, this is Dividend Stock Talk brought by the 10-Minute Trader. Okay, so what we're going to do basically is you're going to ask me some stocks. I'm going to take a look at them, plug them in, see if they fit what I'm doing. Now, it may be important to understand where I'm coming from because a lot of you might be here under the wrong pretense. Meaning, you saw the title Dividend Stock Talk and you thought maybe you can buy some stocks, they're going to pay dividends, and you're going to be all wonderful. It doesn't really work that way. What I'm looking for is a simple, safe, predictable 1% every single week. Okay, now in order to do that, I do what's called a covered call, selling against a good quality company, and there's a reason for that. We'll get into that a little bit later on, as everything I say will come together by the end, and hopefully it'll either make sense or it won't. But here's the thing. I'm 62, I'm retired, so any money that I make trading my own income, trading my own money, okay? Now, I've worked for 5 decades and I retired a few years ago. So everything that I made has to pay my bills for the rest of my days because I really can't rely on the federal government. What are they giving me? I think it's $89 bucks. $585 per month on Social Security. I haven't even got my first Social Security check yet. I was supposed to get it in the month of March, but it don't look like that's happening. Oh well, 5 decades I paid in. Anyway, let's just get down and see what we're looking for. A good quality company. Now, what I consider a good quality company is any company that is consistently profitable year after year after year after year, meaning they share their profits. Dividend stocks, because growth stocks don't share profits. They take all the profits, put it back into the company for capital growth. Well, if you're looking for capital growth, you're definitely in the wrong place. Mr. G, 007. Hi, how you doing? Phalange Dom, what would you qualify PRN? Oh, no. Okay. That's a funny one there, Tom. UHG. Do you buy protective put before this dip? No, why would I? Oh, Blue 420. Cheap, but not downtrend. Hold on. Cagra. We'll take a look at Cagra in a minute. Miley Glow. Hello, Miley Glow. Papa Bear, how you doing? Okay, so let's get the ball rolling. as the night progresses, you will see how it works. I'm going to look at a good quality company just before the EX dividend date, and we're going to get to that in a minute also, because everything has its place in time. Where'd my damn book go? There it is right there. I need my book so I can see what's on my list. Because, yeah, I'm old school. I actually write stuff down because I don't trust computers. Which is kind of funny, because here we are in front of a computer explaining things to you. Yeah, but I don't trust them. Okay? I always write stuff down because it's been my experience over the last 20, 30 years. Yep, I've been online since dial-up, 256K modem. Some of you guys remember that, some of you don't. Some of you are like, what is that? Yeah, though I'm not talking to you then. Dial-up modem on a rotary phone. Yeah, I remember those days. You use margin? Of course I use margin. Why wouldn't I? Dave, we're going to take a look at Macy's. I heard some bad news about Macy's. They're planning on shutting down a whole bunch of stores in New York. I don't know if it's true or not, but I read something over the weekend. That kind of makes me a little uncomfortable. Okay, so somebody want to take a look at Best Buy, BBY, first thing. Okay, now I do everything by the book. 1, 2, 3, A, B, C. Everything's got to be one step. It's kind of like paint by numbers. I don't know if any of you remember paint by numbers. Okay, you get a cardboard with a bunch of squiggly lines on it. 1 red, 2 blue, 3 green. JD, 12 grade. I have no idea. I remember that dial-up modem. Robin does. Old school. Yeah, yep. That is old school. I am so old school, I had a payphone in my living room. Seriously, growing up in the 70s. Okay, you got 5 kids all in school. Okay, yep, that phone was busy constantly. So my mother yanked out the phone, called the phone company and said, hey, put in a payphone. So we had a payphone. If we wanted to call someone, we had to have a dime. Yep, it was a dime for a phone call back in those days, back in the 70s. Yep, dial up. I had a dial up rotary payphone in my house. I did, growing up. All right, so BBY. Now, anytime I look at a stock, I always want to look at the 1-year chart first before I look at anything else, because I want to see what the momentum is. I want to see what the buyers and sellers are doing, and that is us. That's me, and that's you. We buy, we sell. We're the investors. So as an investor in dividend stocks, we're entitled to profits. If the company is consistently profitable year after year after year, guess what? Our portion, our share of those profits increases every year, and that is in the form of a dividend check. So if the company's more profitable this year than they were last year, my dividends are going to go higher. But you'll see what I'm looking for as we progress. Okay, 5 things. Anytime I see a chart, always want to start out with the 1-year chart first, only because that's what Think or Swim does. Okay, this is through Charles Schwab. It's called Think or Swim. So, I'm looking for 5 things, and it should take you 2 to 4 seconds to see these all. Remember, a picture's worth 1,000 words. You ready? See how quickly you can pick them out. 5 things. First, the high. Second, the low. Third, where was it a year ago? Fourth, where is it now? And fifth, what is the motion? That's it. Where was it last year? Where's the high of the year? Where's the low of the year? Where does it look like it's going? Well, we're here now. The bottom is here. The top is here. We got plenty of space here. We got plenty of space there. Okay, well, that looks fine. But before I dive deeper into the chart, I want to take a look at the numbers. Remember I said rule number 5, make sure the number, wait a minute, I didn't go over the rules. Let's back up for a second. All right, so in 2008, my 9-year-old daughter says to me, she said, Daddy, what are you doing? James, we have a shortened week this week. Doesn't that help us? Not really. It's only 4 days instead of 5. So in 2008, my 9-year-old said, who made the money from the payphone? Mom or the phone company? It was the phone company. All right, so anyway, I want to know, my 9-year-old says to me, Daddy, can you teach me? Okay, so think about it. Daddy, can you teach me? My 9-year-old wants to learn how to invest in the stock market. Now, at that time, I was only investing for like 4 or 5 years. Okay, hit or miss, I was doing what normal young traders do. You're sick. Sorry about that, Red. So, to create a trading strategy for a 9-year-old, it had to be simple. It had to be safe, had to be predictable. The profits had to be consistent, and there had to be no way that she could lose. Okay, so remember, a 9-year-old little girl, we want it to be, simple, safe, predictable, all that stuff. So I had to come up with 5 rules. So the 5 rules were pretty simple. When I tell you these, most of you are going to go like, oh, really? That's a no-brainer. That's really. Okay, rule number 1. Never buy anything you do not understand or you do not want to hold on to. If you can't imagine holding on to it for the rest of your life, you probably shouldn't buy it. That's pretty simple. If you don't understand it, you don't know what they do, you have no idea anything, you shouldn't buy it. Plain and simple. We got some noise over here. Who is it? Who is it? Mark, what's happening, Mr. Mark? I'm going to mute you. Don't worry about it. And Mr. Doug. Put the mute on. If you guys have a question, just unmute yourself and ask away. Okay, I just needed, I don't know who it is making the noise in the background, but someone. All right, sorry about that. Got distracted. So those are the 5 criteria: simple, safe, predictable, consistent, no way to lose. So rule 1: never buy something you don't want to own. If you don't want it, don't buy it. Rule number 2: never sell at a loss. Sorry, it's just my rule. If I'm going to buy something, rule number 1, okay, never buy it unless you understand it. If you understand it, then you're okay with the ups and the downs. Look at the ups and the downs here. The high is 86 for the year and the low is 54. That's almost a 30% difference between the high and the low. So if you're not okay with that, buying it at 84 and the possibility of it dropping in the 50s and still not panicking, you probably shouldn't buy it. Rule 1. Rule 2, never settle a loss. Defeats the purpose. Rule 3, this one always boggles my mind because I say it at the beginning of every show, and regardless of what I say about it, there's always someone that throws a stock that doesn't fit. Okay? Rule number 3, make sure the company is consistently profitable. I mean, that is such a no-brainer. It boggles my mind why people put their hard-earned money into companies that just aren't profitable. Now, what I mean by profitable, I'm looking for 2 decades minimum of increased profits. Who are they? Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on old Warren's list. Okay, so rule number 4, weekly options only. Well, the name of the show is Dividend Stock Talk, weekly income for, dividend investing for weekly cash flow. Dividend investing for weekly cash flow. So, yeah, it's got to have dividends and it's got to have weekly options. Rule 5, make sure all the numbers work. That's where we are right here. Well, let me explain. If I'm going to buy it, what am I paying for it? Right now, $62.98. $62.98, $62.98, $62.98, because that's the current price. Okay? If I'm buying it tomorrow morning, hypothetically, I should be buying it at $62.98, somewhere in that area. All these numbers change as soon as the market opens, and they continue to change throughout the day. But by using the numbers that we have, I can make my point. Okay? If the current price, $62.98, the closest strike price, which is a predetermined price which I agree to sell it at somewhere in the future, 59, 60, 61, 62, 63, 64, 65. You see where I'm going with this? 66, so on and so forth. So if I'm buying it at $62.98, the closest strike price is going to be the 63. And if I sell the stock at 63 after buying it at $62.98, I can collect $1.47 per share. Now I know you're thinking, that's it? I'm going to do all this work for $1.47? Yeah. It takes 5 or 10 minutes. Now think about it. 5 to 10 minutes to equal 1%, depending on the size of your account, that could be a good thing. And some of you, it might be, oh, I want more. Well, good for you if you want more. Here's the thing. I started almost 30 years ago with $12,000. That's it. $12,000 over 30 years ago. I took out a second mortgage on the house. The wife was pissed. I slept on the couch for a couple of weeks, but hey, it is what it is. That being said, I want 1% a week. Now, 1% of 62.98 is going to be 63 cents per share. And I get that every single week, or at least I should say that's what I'm looking to get every single week. Okay, so it's paying 147. That's more than 2%, and 2% every single week is well over 100% by the end of the year. Now, it's a 5 or 10 minute strategy. It's pretty easy. Okay, once you decide to buy, if you like Best Buy, this is the way it should go. Number one, what did I buy it for? $62.98. Number two, what am I selling against it? I'm selling the 63, picking up 2%. Lovely. 4, where is it right now? Well, right now it's right there. Where does it look like it's going? Well, it looks like it's going up. Well, that's a good thing. And 5, what should I do next? Well, if everything is going your way with the order that you put in, and we're going to do a couple as we progress, say either let it ride into the sunset, let it expire, let's roll it in. It's a slow progression thing every single week. And it's always the same questions. Number 1, does it make sense? Number 2, do I like this company? Number 3, do I like this company at this current price? Blah, blah, blah. As we progress through the night, you'll see how everything fits together just like a good movie. Everything comes together at the end. The girl gets the guy, they kiss, they make up, they go off floating to the sunset, all that kind of stuff. Anyway, everybody lives happily ever after. Yay! All right, so Best Buy, here's the high, here's the low, here's where it was, here's where it is. Look at this, down, up, down, up. Let's zoom into that and see what we can expect, what we'd like to expect from Best Buy this coming week. All right, 30 days ago, we're at 69. We dropped down to 60. Now we're bouncing back up. Plain to see, 30-day high, 30-day bottom. Now she's going up. Me personally, I want 2 days to the upside, and on the third day, I would jump in. So more than likely, Wednesday was the bottom. Thursday was a little higher. If you're counting the bottoms, we had a higher bottom, a higher high. Friday, we had a higher bottom and a lower top, and we closed a little lower, but we're still heading up. So let's give this one first try of the night. Let's see what a covered call looks like for Best Buy this coming week. If, and only if, you actually like Best Buy. All right, let's take a look. Let's get rid of this. Let's change the strategy from single to covered stock, because a covered call, a buy right, covered call, buy right, I think that's about it. What else do they call it? Renting, leasing, I don't know. Anyway, so I'm buying it at this price here, $62.98, selling the 63s. Let's see what it looks like. Let's see what it sounds like. 63, let's do just one contract so you know what the numbers look like. Now, what I mean by know what the numbers look like, we're all different. We all have a different amount of money to play with. Maybe you got 5,000, maybe you got 10,000, maybe you got 500,000. I don't know. Maybe you got 5 million. I don't know. But it's all the same. 1% of whatever you got is still 1%. All right. So, buy one covered call, Best Buy, BBY, to April 26. That means it expires this Thursday. Is that correct? Because there's no market on Friday. All right. The 63 call option. My profit's going to be 164 per contract. The cost of the trade, including commissions and fees, is going to be 61.36 every contract I want, 6,100. Okay, but what's my profit? Well, I know what the profit is, 164, but what is the rate of return? Because I'm curious, what does 1% look like? All right, let's get the calculator out. If my profit is 164, okay, right there, 164, max profit. Cost of the trade, including commissions and fees, 6,100. That's how much I get risk. Well, think of it this way. I tell people this, and some people get it, some people don't. I'm creating what I like to call weekly cash producing assets. Think about it, a weekly cash producing assets. Riley, how you doing? I see you there. Cam, we'll take a look at Ford in a minute. But think about it. A weekly cash producing asset. If you can take some of your money, create an asset that gives you weekly cash flow, it's almost like buying a vending machine, putting on the corner at First and Main or whatever. So, 2.6% for 1 week. I think that's pretty good if you like Best Buy. It's going to come down to that. It is. This will be the first one of the night. Remember, every night we look for 5. This is number 1, Best Buy. I'm not saying it's not a tip. It's not a recommendation. Okay? This is an adult game. It's kind of like Monopoly. 4 greenhouses, 1 red hotel. You're not guaranteed to win. Most likely, most of you will lose. Because most of you will either hit that wrong button. Oh, here we go. Do something. That just doesn't work. Here we go. Best Buy to April. The 63 call option. Here's your profit, 164. Here's the investment, 6,100 for a 2.6% for 1 week. 2.6. What stock we looking at? Your camera is blurry. Trailer, how you doing today? We're looking at Best Buy, BBY. And by the way, you're on YouTube. So there's another YouTube channel that's live that is just the screen without me standing in front of it. So you're on one YouTube channel, just go to the other YouTube channel. Because the other YouTube channel, you can see all these little numbers. All right. 2 points. What did I say it was? 2.6? 2.6. 2.6. Let's change this a little. Monday, because tomorrow is Monday. All right. What's next? Next. What do we have next? Next. Uh-oh, camera turned off. All right, next. Ford. Let's take a look at Ford. I like me some Ford. Wait a minute, let's get rid of this. Get rid of this. Back to beginning. Back to here. And Ford is next. Interesting. Ford's going to be an automatic no. Did you see how quick that was? Do you remember I told you anytime you look at a chart, a 1-year chart, it takes anywhere between 2 and 4 seconds? Well, high low is, look at this right there. It's actually at the bottom. Now, don't get me wrong. I love it when it comes from a 30-day high to a 30-day bottom. I actually love it when it does that. However, now I'm going to be looking at it tomorrow. I'm going to be looking at it Tuesday. I'm going to be looking at it Wednesday because I want to see where the bottom is for it to turn around and go back up. Because that's what stocks do. They go up and they go down. That's about it. Okay. Andrew, 1% weekly is at least 52% annually. You're beating Warren Buffett and every other investor. Yeah, I get that. But here's the thing, Andrew. 1% a week is 52% simple interest. There's a difference between simple interest and compounded interest. Because compounded interest is more like 67% per year. That's if you keep taking the money and you keep reinvesting it. But if you take the money out like I do, because I do have to pay my bills and I don't have as much as you think I do, but I do have enough to live comfortably, and I do live quite comfortably. Okay. So yes, I know I'm well aware it's over 50%, and I'm well aware it's more than Warren Buffett makes. I'm well aware of all that. All right. Anyway, Ford is going to be a no for this week because we're waiting for the bottom to show up, and then she turned around and go back up again. Now, don't get me wrong. I wouldn't mind buying Ford at 11. Where is it at now? 11.37. I wouldn't mind buying it, but I don't know if that's the bottom because tomorrow it could be lower. So, as much as I like Ford, I'll just keep my eye on it and see when is it going to turn and go back up, because then I want to jump in. Cam, you're going to watch that one. Cam, you're usually here every night anyway, so. Ooh. All righty. Eric wants to take a look at Kraft Heinz, KHC. Ooh, yes, I like this one. Right off the top of my head, not even 2 seconds. Do you know why? Because I know what to look for. The high, the low, where is it going? Down, up. Well, that's the easy one. If you want it a little bit more complicated, down, up, down, up, down, up, down, up. Same thing. She dropped. Here's the bottom. Now she's bouncing up. Let's zoom in a little closer. But before we do, 22.04 is the current price. So if I buy it at 22.04, I'm going to want to sell the 22s and pick up 29. That's more than 1%. And it's Kraft Heinz. Now, I may have bought Kraft Heinz maybe 4, 5 times in the last 30 years. Because it's such a big company, it's been around for so long, they don't feel as if they have to give us decent premiums. So now they are, and look, we're bouncing off the bottom of the year. You've heard it over and over and over again. You make your money buying low and selling high. This company is over 100 years old. They have what is called the Our Dividend King, which means 5 decades. Okay, hold on. I'm going to put this down. You ready? 5 decades. That's not 5. It's 10, 20, 30, 40, 50 years. A half a century. Every single year, more and more and more and more money. Every year, their dividends increase, which means every year as an investor, my dividend increases every single year. And if I can collect 1% every week on it, oh, hell yeah. But here's the thing. I might buy it this week, collect 1% this week, and if I won't collect 1% next week, I'll just get rid of it and then try it on another stock. It's just rotating door. Yeah, it's on my list only when this happens, because you can't get any lower than the low of the year, and that was last week. So I like to look at the bottom, which is right there. Let's zoom in so you get a better look at it. Okay, 30-day high, 30-day bottom. Now she's bouncing off. Actually, not the 30-day bottom. That's the bottom of the year. Now we have 1, 2, 3 days to the upside. The 22 is going for 29. Oh, hell yeah, I'm going to do that one. Look at Kraft Heinz. It's like they didn't just start a lemonade stand recently. They've been around for over 100 years. So, yeah, I'm going to do that one at 22. 22, there it is. One contract. And here's Johnny. Buy one covered call, KHC, Kraft Heinz. 2 April, that's this coming Thursday. And the 22 call option. Okay, so profits 32, investments 21. Well, let's do a little bit of math. Calculator, if you please. $32 is the profit. The investment is going to be $2,168 for a return of 1.47 for the week. That's like 1.5% for 1 week. If you like Kraft Heinz. Okay, I'm going to save this one. I like me some Kraft. All right, Kraft Heinz. That's 2 for the evening. We got 3 more to go. Andre Houston. How you doing, Andre? Motion Baby. What's going on? Braden Scruggs. Hey. That's it. Just, hey. All right, here we go. Kraft Heinz. There she is. Kraft Heinz to April 22 call. Here's the profit, 32. The investment's going to be 2168 for a 1.47. Okay, let's call it 1.5. It's close enough. And that's just for 1 week. 1.4. 1.47. Okay, I like that one. I do. What do we have next? BE, Scarlet Billionaire. How are you today? BE, isn't that something, Brazil Energy, something like that? I don't know. It's not high priority on my list, so let's take a gander. BE. Bloom Energy. Okay. Here we go. High, low, where was it? Where is it? Up, down, up, down. It's going to be a no only because it's dropping. Okay? Here's the high, down, back up, back down, going down. We'll look for the new bottom. Once the bottom shows up, then we'll jump in. Till then, no. I didn't say compounding. Thank you there, Mr. Andrew. That's a giant red flag for everyone. He claims better returns than Buffett's. Andrew, I'm not quite sure what you're getting with, but okay. Can you name a few good weekly dividend stocks? Yes, I can, Mr. G. We got Bloom Energy, Home Depot, Lowe's, AT&T, IBM, Verizon, Bank of America, MasterCard, Visa, ExxonMobil, Chevron, Hess, British Petroleum. I could keep going, but that's just a few of them. Mikey G, 4 days, yes, I know. Oh, Robin, GE. GE used to be a good stock, but I just don't know what it's doing lately. Okay? Here's the top. She's dropping. Here's the bottom. Up, down. Just doesn't look right at this moment. But if you like, Robin, if you really like GE, okay, here's the 30-day top. 30-day bottom was Friday. Just wait. She'll find the bottom, go back up again. Patience. Patience is a virtue. 62.98 to 63 for Best Buy is 2 cents. How is that 2.6%? Sparky, that's a great question. Let me show you, Sparky, because apparently you weren't listening. Here we go. Sparky, are you ready? Here's your top right there. Here's your bottom right there. It's currently at 62.98. Let's zoom into this thing. Okay, here we go. You ready, Sparky? 30-day top, 71. 60 is the bottom. She drops. Now she's going back up. Currently at 62.98. You're absolutely 100% correct. I am agreeing with you. 62.98 to 63 is only 2 cents. So how is that 2.6%? Sparky, what you're missing is a half of the conversation. Okay? You must include the premium for contract. Enza, thank you very much. So Sparky, exactly what Enza said. So if I buy it at 62.98 tomorrow morning, that is my entry price, 62.98. That is extremely close to the 63 option contract. So if I sell the 63 option contract, I will collect $1.47 per share. Okay? So I'm not collecting just the 2 cents. I'm collecting the 2 cents plus the $1.47, which comes to a whopping $1.49. Not a lot of money, I agree. But if you add together the premium that you collect, $1.47, plus the little 2 cents difference between the purchase price and the sales price of 63, it comes to $1.49, and then you divide it by your purchase price, 62, whatever, and it comes to 2.6%. Does that make sense? He's talking about selling. Obi, I'm not quite sure he's talking about selling. He wanted to know 62.98 to 63 for Best Buy is only 2 cents. How is that 2.6%? It dropped to 62 after hours trade. Farmer Dan, I get that. I understand completely. Really, I do. What I'm saying is based on the current numbers that we're looking at. And Farmer Dan, I also said that first thing tomorrow morning, all these numbers are going to change. So the mathematics and the equation is the same, just the numbers are going to change. But at this moment in time, if I buy it at 62.98, and then I turn around and sell it at the 63, based on the numbers here, I'm going to collect that, and that is 2 point whatever of that price. What would be the best weekly? Okay, Bless Drakel, not 100% sure what you're looking for. You're looking for me to give you the answers. That I don't give tips. Okay, I make observations. Somebody asked me about Best Buy. I took a look at the numbers, did a little bit of fancy math, and came up with 2 point whatever percentage it was. The Rhino, what's happening? Okay, so does that make sense? Sparky. Carol Johnson, what do you think about Chevron stock now? Buy, sell, or hold? Hold on a second. I was looking for... Sparky has no comment. Okay. No comment from Mr. Sparky. All right, Maple, how you doing? Bless Drakel, what would I say about weekly call options? Hold on. What do I think about Chevron, CVX? Well, let's take a look at Chevron. CVX, Chevron. Here we go. Now, if you like Chevron, more power to you. However, I don't buy ever, never, ever have I ever bought anything at the high. It's the high of the year. Great if you bought down here, but it's right here. I don't buy anything at the high, so it's going to be a no. That's my opinion on Chevron. SoFi, long term, I've been chasing it down for from the low 20s. Okay. Interesting. Okay, so here is SoFi. Here's the high at 33. Here's the bottom at 8. Last year we were at 11. We shoot up to 33, drop down to 15. That's a 50% drop. Okay, so remember what I said about rule number 1? If you like SoFi, great, wonderful. 33 is the high, 8 is the bottom. That's a 75% difference between 8 and 32. Okay, so from 32 to 8 is a 75% drop, but from 8 to 32 is like a 300% increase. It all depends. Now, me personally, I don't buy SoFi because the numbers on the tail end just don't look good. Let me show you what I'm talking about. Let's go on over to Yahoo Finance. Now, if you're going to be trading, if you're going to be investing your own money, you really do need to have access to a financial website. Well, here we go. So let's put SoFi into the financial website and see what kind of numbers we're looking at. SOFI. Now, mainly the thing that I'm looking for anytime I look at a stock is I want to look at the consistency of profitability. Okay? Now, who came up with this one? I meant you were talking about selling a covered call. Thank you, Obi. All right. Carson. As we see stock values fall due to the 200-day versus the 90-day crude oil and the dollar-yen rate. Okay. Where do you see value in dividend aristocrats? Ooh, Sparky, sorry. Do not understand where the 146 came from. Okay, Sparky, it came from, hold on. What stock were we even talking about? I forget. It wasn't SoFi, I know that much. All right, Sparky, where it came from is right over here. It's called a call option. That's like when I buy the stock, I own it, I can do whatever I want. Now, selling a call option against a position that I have. So if I buy 100 shares of stock, it's going to cost me X amount of dollars. Now, most of the time, people would wait for the stock to go up before they try to sell at a loss. Well, they created something called a stock option. Now, a stock option, you can buy it, you can sell it. If I sell a stock option, I'm selling somebody the right to buy it from me at a certain price by a certain date. And when they do that, they pay what is called a premium in order to do so. It's kind of like insurance payment on your car or on your house or on your health. An insurance premium is something you pay on a weekly, monthly, annual basis. Well, we're talking about weekly options, weekly contracts, weekly premiums. So it's an insurance policy on your stock. So if I buy it for this price, $15.23, I can sell it at 15, pick up 61, or I can sell it at 15.50 and pick up 36. And it's going to be a mathematical equation. Okay, what did I buy it for? What did I sell it for? What am I walking away with? Okay, these numbers are going to change all the time. It is the high of the decade. Holy cow. Why would I buy something at the high of the decade? So anyway, let's get back to SoFi. Because remember I said I don't like SoFi, and there's a reason why I don't like SoFi. SoFi doesn't share its profits. There are no dividends and the time selected. So we're here at a baseball game trying to look for the field goal kicker. It just doesn't work. Okay? We're doing stocks, options on dividend stocks. If SoFi doesn't have dividends, why are we looking at it? Because if they don't share their profits, that means if I'm going to invest in it, I have to physically go in and take a look at 20 years worth of quarterly reports and annual reports just to see if they're profitable. And also, if the company is going to do what I want it to do, yes, I see that, Com. What were you thinking? I'm going to get to these questions. We looked at KHC. Kissable, how are you doing today? All right. Thoughts on Micron? Smook, we'll look at Micron in a second, all right? I'm still answering his questions. So anyway, Sparky, when I buy it, I have the right to do whatever I want with it. Okay? I can hold it if I want and collect the dividends if I want. Now, what I choose to do is I choose to sell it to someone else using an option contract. So it's kind of like buying it for one price, selling it for another, and kind of taking that, hey, let me cut in line, I'll give you a few bucks type scenario. I don't know. But hopefully it makes sense. Tomato, it's an interesting name. Carson, are you more persuaded by PE or the cash on hand? Carson, I'm looking for, see if you understand this, Carson, you ready? I'm looking for the consistency of profitability. And then I want to take a look at the numbers, fundamentals. So I want to take fundamental analysis along with analytics. See where it's going. Shango? What do you think about SoFi 4% savings account? Okay, so you missed everything I just said 2 seconds ago that I don't like SoFi because it doesn't share any profits. So no, I don't do SoFi. And 4% a year, hey, you have fun with that. I'm just saying, okay? 4%, if you like it, fine, you do it. I ordered one contract. Way to go, Farmer Dan. El Pablo, ¿qué pasa, amigo? All right, so I'm hoping that makes sense. Okay, if I buy it, I can do whatever I want with it. SoFi, I don't really like because they don't share the profits. Okay, and it's very challenging. When a company doesn't share the profits, it's challenging to be able to see when they usually move. Now, that brings me to this situation, which we actually got to share this. Okay. Hold on, this might make sense to some people. This here behind me is called a calendar. Okay, March 2026. It's called an EX dividend calendar. It tells me when the stocks are getting ready to pay their dividends. Now, there's a reason for that. The reason there's a calendar to tell you when stocks pay their dividend, because dividend stocks, Nordson, Medtronic, Walmart, Albemarle, Coca-Cola, Pepsi, Kimberly-Clark, they have a tendency to go up in value just before they pay the dividend. Then after they pay the dividend, they have a tendency to go down. So knowing ahead of time when a stock is going to move based on the calendar, because they go up just before the dividend is paid, by knowing that information, I can schedule when to look at certain stocks. So if this is March, let's go take a look at April, because April is next month. All right, so we're here. This is tomorrow. So we got Clorox, Lowe's, Colgate-Palmolive, Hormel, Abbott Labs, General Dynamics coming up. So if I like the Woodcraft, how you doing? So if I like those companies, I want to buy them. I want to buy them before the stock increases. And the stock usually increases about a week or two before the EX date. Well, if the EX date is here, I want to buy it 2 weeks before on a Monday, which would be tomorrow. So if I buy it tomorrow and I collect the premium for this week, it's usually higher than the dividend. That's a good thing. And the stock goes up just before the EX date, 17th. So I buy here, I collect my little premium. If it doesn't hit my target, I do it again. If it doesn't hit my target, I do it a third time. And guess what? I collect 3 premiums before I get the dividend. If it goes over my target price, great, I'll sell it. Because I'm looking for consistency and I'm looking for profitability. All right? Okay, Farmer Dan, we already looked at KHC. Robin wants to take a look at Nike. Let's go back to where we were. Nike, NKE, if you like Nike. Okay, 2 seconds. High, low, is, look at the motion. Up, down, okay. High, low, where was it? Where is it? Down, up, down. It's going down. So at this moment in time, Nike's going to be a no, but it will be on my watch. Do you know why? Because 30 days ago, we're at 68. So we went from 68 to 51. That's a big drop, 68 to 51. Okay, what was that, 17 bucks? That's a big drop. So how much further down is it going to go before it finds the bottom and turns around? So yeah, it will be on my list for next week and the week after, because the bottom is going to show up sooner or later. And if you like the company, great. Write it down. Not this week, what it's going to look like next week. What else do we have? Phil, how you doing? Robin, thanks. Ooh, Eric, Merck. Gotta like Merck, MRK. Ooh, now that's interesting. Check that out. The high, the low, where was it? Where is it? Look at this. Down, up, down, up. Well, that actually looks good. Because once we zoom into it and we get rid of all this crap and look at just this right here, it looks totally different. You ready? Look at that. Totally different. Shoots up, 30-day high, drops down, 30-day bottom. Now she's going up. Where is she? Here's the bottom. Here's the top. We're smack dab in the middle. And we're in an uptrend. But here's the thing. We are in an uptrend. It's easy to see, down, up. But how far up did we go? Bottom's here, 113. Okay, we hit 121. So 113 to 121 is $8. So what percentage of 113 is $8? It's not even 10%. 10% would be 11 bucks. So we're not even at 10% yet. We're at probably 7%. So from the bottom here to here, it's only 7%. It's not that big of a jump. So yeah, I would do in the 119s. The 119s, paying $250. Well, that's over 2%. Let's take a look at Merck for this week. All right, so covered call. Here we go. And the 120 right there, one contract, Boom, 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 boom. Right there. And here's Johnny. Buy one covered call Merck. 2 April, that's this Thursday. The 120 call option. Look at the current price, 119.63. So if I buy it at 119.63, yeah, I'm going to sell it at 120 because it's the closest strike price to my purchase price. All right, what am I making? Max profit, 254. What's my investment? What do I got riding on it? Cost of trade, including commissions and fees, 11,746. So think about it. Anytime now I'm creating what's called, in my opinion, it's called a weekly cash producing asset, which means newbie alert. Anytime I see Nvidia on any one of these screens, so yeah, I'm on 9 different screens. So I'm live streaming on 9 different platforms. So I look at each screen, and every once in a while I'll catch something in the corner of my eye. Newbie wants to take a look at Nvidia. Okay, I'll take a look at it, and I'll tell you why I don't like it in a few minutes. But newbie alert. Anyway, okay, so this is what my profit's going to be, 254. My investment, as I was saying, I'm creating a weekly cash producing asset. If I pay 11,746, there's a cold day in hell before I'd sell it for less than that. That's just me. I refuse rule number two, never sell at a loss. That's my rule. Now, some of you will do that because some of you just think differently. Okay, and there's nothing wrong with it. There's nothing wrong with taking a little bit of loss and able to jump onto an opportunity that you otherwise would have missed, holding on to a losing position. But, hey, I refuse to take a loss. So if I buy it for this price, never, ever, ever will I sell it for less than that price. So I don't think that's a risk for me because I pay attention to rule number 1, which is never buy something you do not want to hold on to long term. Okay, so let's see what kind of rate of return this would be, if anything at all. For that, we need the calculator. Profit, 254. What is it costing me? What is my investment in this scenario? 11,746 comes to a grand total of 2.1%. Now, I am perfectly okay with putting money into Merck and picking up 2.16% for 1 week. I'm perfectly okay with that. But you got to ask yourself the question, are you okay with it? Do you like Merck? Always, always, always do your own research because after all, the decision to buy or not buy is always your decision. Don't listen to a word. You shouldn't listen to anybody online. You should do your own homework, your own research. Here we go. Merck. MRK. 2 April, which is this coming Thursday. The 120 call option. 254 is the current profit. 11,746 is the investment. So you need to ask yourself the question, do I like Merck? Do I like Merck at this price? Am I willing to buy it and hold on to it, never sell it for less than I bought for it, and continuously sell covered calls every single week to generate cash flow? That's the questions you got to ask yourself. 5 simple questions, really not that difficult. Eric, we'll take a look at that in a second. Okay? What do we have over there? No. Somebody over here wants to take a look at Nvidia. Okay, so if I know. Lisa, how you doing? AJ? Blank, when will the war end and the market rebound? Don't know, don't care. Now, the reason I say that is I've been investing since the early 1990s. Okay? So I've seen a lot of crap over the last 36 years. Okay? Yes, we've had war before. We've had economic turmoil in the last 30, 40 years. Okay? So not much has changed. I mean, the sun still rises in the east. The sun still sets in the west. You go to the store, and there's still a rude guy in line, and there's still people doing it. To me, nothing has changed, just the numbers. It's just a numbers game. Yeah, things are a little bit more expensive. Yeah, but it is what it is. I know every other generation besides the Gen Xers hates that statement. It is what it is. Because we Gen Xers, it is what it is, East, west, north, south, wet, dry, cold, hot. It's logic. All right, anyway, so I'm going to save this one. What was the rate of return on this one? 2.16. Okay, I'll keep this one at 2.16. Halfway done, 2.16. Gotta love it. We got 3. We need 2 more. 5 a night. What do we got? Ooh, Eric wants to take a look at Merck. We already did that. Eric Kroger. Eric, come on. Got to give someone else some space. Blank. My rule is buy low, sell high. Oh, that's a good rule. I think I'll copy that one. Vaughn, how are you? Mr. Fix-It. Wayne Ashley. You don't care about the war? No, I don't. It's a massive chess game that nobody seems to understand what's going on, except for those who understand what's going on. If you're not worried, I'm not worried. Thank you, sir. I'm locking in today with my 300. Okay, nope, good rule. Gotta love it. Okay, so over here, Nike, we did that one. Thanks. Merck, we did that one. Eric wants to take a look at Kroger. All right, Kroger. Let's see what Kroger looks like. Nope, good rule. Gotta love it. Vil wants to take a look at K-View. Hold on. Kroger's next. Then we'll look at K-View. Ooh, look at this. The top, the bottom. Where was it? Where is it? Up, down, up, down, up. Okay. It's actually doing what I like it to do right there. Okay. 30-day bottom, 30-day top. Pulls back. Now we get our 2 days right there. Top, bottom, 1, 2. Right there. So if tomorrow it's higher than that, that's where I jump in. Okay? The top, down to the bottom, 2 days up, 1, 2, right there. Let me zoom in a little closer so you get a better view of it. Okay? 67, 76, 70, now we're at 73. Up, down, up. That's what stocks do. They go up, they go down, that's it, that's all, no more. That's it, folks. So, Kroger, let's take a look. 73. Yeah, buddy. Okay, let's look at it, 73. Back to the covered call at 73, right there. One contract. What does that look like? Right here. Here's Johnny. By one covered call, Kroger, KR, to April 26th. That's this coming Thursday. No trading on Friday. The 73 call option. The profit, 95. The investment, cost of the trade, including commissions and fees, 7,200. What does that number look like? Calculator, 95 profit, divide by the investment, 7205, comes to a grand total of 1.3. I like 1.3. Mike wants to take a look at Honeywell. Kroger is nearly at a yearly high. Thoughts? Hold that thought for 1 second, Zach. I'm gonna zoom into that for you. Okay, nope. We'll take a look at Barack in a minute. All right, Zach. I'm gonna address that in a second. All right, you ready? 1.3. That's more than 1%. We'll take that. All right. So. Even without the AI nonsense, considering their massive footprint in IT, thoughts on AVGO? We'll take a look at AVGO in a minute. Right now, let's finish up with what we're doing right here. Right here, we are looking at, what are we looking at? Kroger? Is it? I don't know. What one is it? Kroger. There we go. Kroger. 2 April. 73 call option. Here's the profit, 95. Here's the investment, 72 for 1.3%. 1.3 is over 1%. So 1.3 every week. I can do that. Uh-oh, where did everything go? No. There it is. $1.3. There we go. That looks much better. All right. That's 4. We got one more to go. All right. So, Zach has a question about Kroger. You ready, Mr. Zach? Okay. All right, Zach, you ready? The high of the year, 77. Okay, where are we right now? She goes from 77 down to 70. That's a 10% drop. Yeah. Farmer Dan, I see that. Okay, so you got a high here, 10% drop. Then she went up to 71, 72. We still have all that room right there. $5. Now, I'm only looking for 1%. So 1% of a $70 stock is only 73 cents. So from here to here, 73 to 77 is $4. I'm looking for 73 cents. That's it. Do you see that, Zach? Okay. 30. Top, bottom. Now she's bouncing. I get what you're saying, and you are correct. It's close to a 5-year high. I understand that. Okay? But you can't hide from the facts. Here's the bottom, shoots up. Here's the top, it drops. You call that profit taking. Now she's going back up again. Okay? Eric wants to take a look at Cagra. We'll take a look at that in a minute. Okay, Mike wants to take a look at Honeywell. H-O-N, Honeywell. Ooh, almost the same thing. Had a minor problem right there, though. Remember the 5 things? Here we go. High, low, where was it? Where is it? Down, up, down, up, down, up, down. Okay, not quite making it there. Almost. Okay, 30-day high, 30-day bottom. Here's what we missed. But Friday kind of ruined that. Okay, 30-day high at 248. She drops down to 220. It's a $28 drop. Back up, but didn't quite make it. So yeah, she's still dropping. So no to Honeywell for this week. Sorry, dude. All right, what else do we have? Eric wants to take a look at Cagra, C-A-G. C-A-G-A-T-I-O-N. Okay, here we go. The high, the low, where was it? Where is it? Look at it. Down, up, down, up. What's going on right there? Let's zoom in to find out. But before we do, 1562, the 1550s go for 45. That's over 3%. Yeah. All right, so let's zoom in. Okay, here's the high. She drops, back up, back down, back up. Not really having any distinct movement. Okay, so she bottoms out 3 times. Let's zoom into that. Let me show you those. Okay, so we get a bottom, 1507, 1507, 1504, 1511, 1516. All right here, look, 1, 2, 3, 4, 5. 5 times. It just doesn't want to seem to go lower than that. That's what you want to call support right there, the 15. So when is it going to go up? I don't know. 1, 2, 3. There's your 3 days to the upside. If you like it. What is the best chart to use weekly or monthly? Lorenzo, it depends on what it is you're looking for. The Wicked North. When are stocks going to come back? I'm losing my shirt. Now, Wicked North, I have a little bit of an issue when you say you're losing your shirt. You only lose when you agree to sell for less than what you paid for it. If you own the ability to sell a contract, you actually have a viable weekly cash flow opportunity. Nope wants to take a look at Barak Mining. Hold on, we're going to do this one right here, 1550. All right, covered stock right there, 1550. One contract. And here we go. Buy one covered call, CAG, 2 April. Okay, that's this coming Thursday. The $15.50 call option. 38's the profit, 1500 is the investment. What rate of return is that for 4 days? Okay, we know the profit, 38. The investment is going to be $1,512. And for Cagra, that's 2.5% for 1 week. What do I think about bank stocks? Lewis, you actually got to give me one. There's a whole bunch of them. Why is the market tanking so bad? Because you're buying. I have no answer. Which broker is this? This here, Mr. Fix-It, is Thinkorswim, owned by Charles Schwab. Okay, sit tight. Hold on, we're going to get to those in a second. So 2.5% for Cagra. You need to ask yourself the question, do I like Cagra? You either like it or you don't. I agree. Realize losses or gains. Thank you, financial comedian. Hey, the financial comedian. Dude, I gave you a call today. You didn't answer. When I say I'll give you a call if you send me your number, well, if you send me a number and you don't answer, I can't help that one. This one is 2.5. Yep, financial comedian. I gave you a call today. You didn't answer. $2.5. Where are you? There you are. There she is. Cagra. Cagra, CAG, 2 April. That's this coming Thursday. The 1550 call option. The stock is currently at 1573, so I'm actually selling it for less than what I paid for it and still walking away perfect. Don't know it. Oh, didn't know it was you. You can only tell if you actually answer the phone. And by the way, what do you call it? Caller ID. Should have told you it was James. Anyway, so here we go. 38's the profit. 1500 is the investment for a 2.5% for 4 days. So you got a couple of questions rattling in your head. Here we go. You ready? Question number 1. Does it make sense? Question number 2. Do I like this company? Question number 3. Do I like this company at this current price? It's going to be a yes or a no. You either like it or you don't. Oh, it just said your city. Okay, I got that. Nick, do you journal all your trades or recommend like keeping a cost basis spreadsheet? Nick, that's a great idea. No, I don't. Let me tell you what I do, Nick. Hold on. Let's see if Jacob has it up and running. Hold on there for a second, Nick. We're going to wait for the website to load. This one's 2.5. All right, let's save this one. And that's it. That's number 5 for the day. 2.5. All right, Mr. Nick. That's the website. Okay. Select the year. 2024. Or 2025. Let's do that. Ready? Here we go. Here's all my trades right here. Nick. So on the website, I don't know if you can see it. Week 11, week 12, week 13. Well, that's for the first quarter. He's doing it by quarters. All right. I still like mine better, but, you know, it is what it is. Click to enlarge right there. Uh-oh. I'm going to have to talk to Jacob about that one. Click to enlarge. Uh-oh. Going to have to talk to him about that one, too. Okay. So my son Jacob is redoing my website, but he's doing it in a manner which I have no clue. Totally different than from what I did. So let's see if we can find that one. There it is. Here we go. This is the one that I did. All right, Nick, you ready for this? And here we go, Mr. Nick. Just zoom on down here. Let's go right. There we go. Why not? What do you think, Nick? Timestamps? The strategy? How many contracts? What stock it was? What's the dates? Like calls or stocks? The profit or losses? All there. You got 2.5 years there. Okay, but what you don't have here is this. I don't know which one this is. Wrong one. Hold on, 2024. That's what I wanted to say. All right, Mr. Nick, are you ready? I have all my trades posted online for view going all the way back to August 31st. August 31st, 2011. Okay? So yeah, every single trade that I have done in one account all the way back to 2011. I did 2 accounts in 2024. 2025, it was 3 different. So as of this moment, I share 3 accounts. So you can take a look at every single trade that I did for the last 15 or 20 years. They're available online all the way back to 2011. So yeah, I do keep track of them. Maybe not the way you keep track of them, but that's the way I kept track of them. All right, I'm going to sit down and get comfortable for a bit. All right. Vil 319 wants to take a look at K-View. K-View. Okay, let's take a look at K-View. K-V-U-E, K-View. Interesting. No real rhyme or reason to this one. You ready, Vil? Okay, here's the high. Here's the low. Here's where it was. Here's where it is. She down, up, down, up, down, up, down, sideways. Not really going anywhere there. Okay. Here's the high. Here's the low. Not really going anywhere. So there's no real rhyme or reason to K-View at the moment. Just kind of going in a channel. If you like K-View. What do we have? What do we have? Nick, do you have a... Yeah, we did that one. Welcome to 70. Thank you, welcome to 70. Yep, got that one. It just said your city. It looks like we are neighbors as far as city. Yep, I'm in St. Petersburg. Farmer Dan, I gained 77% since I started this strategy after the year 2026. I learned to really study. Farmer Dan, that's awesome. That's better than I did. Okay, I did 68. You did 77. Nice. Good for you. How do you keep track of all the information on trades, cost basis, and premium? Nick, I don't. Because, see, unlike you, I'm retired. Okay, so I'll put it to you this way. If I have 100,000 in my account, my objective would be to get 1%. Well, 1% of 100,000 is 1,000. 1% of 150 is 1,500. Well, it's either I made my target or I did not make my target. That's it. Either I make $1,000 this week off that 100,000, 1%, or I don't. I don't worry about it if I don't. I'm retired. I stopped worrying about things a long time ago. Either works or it don't. Nick, how do you, we already talked about that one. Phil, how can I sell options weekly when the underlying stock dropped and the premiums are nothing? Hold that thought. I'm going to pause for 1 second because I'm going to open up my other account and I'm going to write down something. Okay? Because I have in one account 5 stocks and all 5 of them are down. So I'm going to tell you what I do with them. Okay? But I got to turn off this one right here because I have to actually go to that website. So here we go. Uh-oh. It's not opening up. Kind of hard to prove a point if it don't open, you know what I mean? Damn it. All right, well, that's not going to work. All right, see if I can understand this one. Phil, do me a favor. Rattle me off a couple of stocks that you're into and the price you're into it at. Because here's an idea. Okay, let's take a look at Dell for a second. No, Dell's not going to work because it's up. T, that's not going to work. That'll work. Microsoft, you ready? Take a look at Microsoft. It's currently at 356. The 355s are going for 655. That works. Okay, so here's an idea. Are you ready? Phil, check this out. Let's say, hypothetically speaking, okay? This is just hypothetical, Mr. Phil. Ford at 15. All right, hold on. You're at Ford at 15. Hold on. Why the hell would you have bought Ford at 15? All right, Phil. I'm going to tell you something, Phil. You're not going to like it. You ready? Dumb shit. What the hell did you buy Ford for at 15? That's the high of the year. Why? Seriously, Phil, why the hell would you buy at the high of the year? Now, I really can't feel bad for you for doing something like that. Okay, you buy low, you sell high. Why? 15, it never even hit 15 this year. The high is right there. Okay, right there is the high. And that was 1482. So how long ago did you buy it? And why haven't you dollar cost averaged on it? Okay, anyway, 15. All right, fine. Currently, 15 is going to be worth nothing. But the 12 is worth 3 and the 1150 is worth 14. It's not a good one, Mr. Phil. Because you're right. The premiums are crap. That's 4 days. So, hypothetically speaking, Ford does pay a dividend every 90 days. All right, so this week it's crap. All right, fine. Next week, 3 weeks. Here we go, 17th. The 1250s, the 12s, right there, paying 16. So the 12s are paying 16, which would give you money to yeah. So the further you go out, Phil, yeah, you bought it last year. So you go out further and sell strike prices further out. You know, a week, 2 weeks, 3 weeks. Kohl's at 15.90. Hold on, Farmer Dan, we'll take a look at that in a second. Okay, so Farmer Dan says Kohl's, 15.93. Well, Kohl's at 15.93 doesn't look that bad. The high is at 25. The bottom is at 6. So it goes from 6 to 25 down to 12. So from 6 to 25, is 300% increase, Farmer Dan. Okay, last April, 6.25, that's a 300% increase. Now from 25 to 12.50, that's a 50% drop. Okay, you're in at 15, what is it, 15.93, almost 16 bucks. Okay, you're in at 16. We're here right now. Okay, we're here at 12.50. The 13.50s are right here, and the 13.50s are going for 25, which is more than 1%, right, Farmer Dan? You can go out further to the 14s, and the 14s are going for 20 cents. That's more than 1%. But that's way up to April. So for this week, the 13.50s for this week are going for 11. Not quite 1%. The 13s are going for 19, but look how close it is. You're still bringing in something. The financial comedian can take the loss to offset other gains. You could. Same with Kohl's. Yeah, I see that. But here's the thing. You can collect the dividends because you own the stock. That's number one. And is the company consistently increasing the profits? Well, that's a good question. But Kohl's this week, okay, the 14s are going for like 8 cents. The 13.50s 11. The 13s 19. I wouldn't go lower than 13 for this week, me personally. But then again, I look at mine twice a week. Okay, so right now we're at 12.50. So 13.50 is way up here, and 13.50 is paying me close to 1%. So it's just a numbers game. Okay, OG, well, really appreciate you sharing your knowledge with us. You're welcome. Ooh, Vil, IBM 255. IBM. Okay, topped out at 330, bottomed out at 218, down, up, down, up, down, up, down. We're sitting here at 236. You said you're in that at 255. Well, 255 ain't that bad. Okay, 255's right here. Okay, currently you're at 236. What's wrong with doing the 240s? The 240s are right here, or the 245s are right here. You got to zoom in and figure out which one makes sense. 240s here, that's a nice number. 240, 250 right there. The 245 is bringing 157, and that is right there. So can it go up there? Yeah, it can. But is it going to? Okay, there's a lot of things it can do, but what is it going to do? Those are always going to be different. And you have to decide what makes sense to you. And if doing this week's doesn't make sense, well, then don't do this week's. Do next week's. 10 April. Okay, well, we're currently at 236, which is right there. Okay, so the 245s, which are right here, well, those are going for 335, which is 1.5%. You can play with the numbers, you can play with the dates all you want. You can push it all the way out into July if you want to. Because in July, okay, right now, the 255s, which are not even on this chart, are selling for $12.50 per share. That's $1,200 per contract. And you're selling it at $255, but that's all the way out into July. Well, guess what? July's coming anyway. So if you like it, why not sell the 255s in July, collect the dividend, the first quarter, second quarter, because July starts the third quarter. So it's always going to be a numbers game. What did I buy it for? What am I selling it for? Okay, where is it? Where is it going? And what should I do next? These are all numbers that you should keep your eye on. Zach, CDE, I have no idea what that is. CDE. Core mining. Okay, here we go. Here's the top, here's the bottom, here's where it is, up, down, Going to be a no for a couple of days until it finds the bottom. See, here's the top at 27, drops down to 16. Well, where's she going? I don't know. Is she still going down, or is she going to turn around and go up? Only time will tell. And guess what? It's going to show up or it's not. Some precious metal mine. Okay, I got that. I see that. All right, Lewis, Wells Fargo. We'll take a look at that for a second. WFS. No, WFC, sorry. WFC. Okay, it's going to be a no. Sorry. Not that I don't like it. I like Wells Fargo. The top, the bottom, where was it? Where is it? Look at this. Down, up, down. So you got your top right here. 94 drops to 74, back up, back down. So as she drops from the 95 down to here, the 94 down to 74, that's $20 right up the tubes. It's almost a 20% drop. Then she shoots up after the profit taken. Now she's got more profit taken. We're saying 77. So you got to find a new bottom here. Just wait, it'll show up. It has a tendency to show up. Seagate, STZ. No real rhyme or reason to Seagate. All right, what do we have down here? Smook wants to take a look at Micron. Micron, hell no. Sorry, dude. You see that? The high was 2 weeks ago. Now she's dropping. Maybe she's turning here. Maybe we'll look at it tomorrow. Ask me again tomorrow. We'll take a look. Do you like selling covered calls? Isaac Newton, how are you today? Of course I do. They're consistently profitable. Why wouldn't I? I've been making in-the-money calls, making 4 to 5% a month. You do realize 4 to 5% a month does come to 1% weekly. What were you thinking? Absolutely. Good info. Thank you there, Com. Dark liquid fan. What's that method called where you collect 3 premiums and sell and collect a dividend? It's not really a strategy. It's called dividend capturing 2.0. COB, PJ Cajun, how you doing today? 10-minute trading strategy. That's exactly what it's called, the 10-minute trading strategy. It's climbing the walls of worry. Who said that one? Hey, Charles, how you doing? Marathon. Now, is that marathon or marathon? Wait, hold on a second. PJ Cajun wants to take a look at Campbell Soup. CPB. Ooh, check that out. Maybe it is something interesting. All right, Clueless. Is that marathon, M-A-R-A, or is it M-A-R-X? I forget which one. Because there's 2 marathons. It's Marathon the Gas and Mara something. I don't know. What's the ticker symbol, if you don't mind? Okay, so Campbell Soup drops back up, back down, back up, back down, back down. Here's the bottom of the year. The top of the year, $40. The bottom of the year, $20. That's a 50% drop. Campbell Soup has a 50% drop. So what is it doing next? $30, $20. Now it's bouncing. Wednesday was the bottom. Thursday. Let's zoom into that a little bit closer so you get a better view of it. Okay? Wednesday was the bottom. Thursday, 1 day up. Friday, that's 2 days. So if this thing jumps up again on Monday over 22, then it's going to be a jump in. Okay, the 22s are going for 40. Not quite 2%, but close enough. Could be. But still, top, bottom, now she's bouncing. Okay, 1, 2 days. 2 days to the upside. Tomorrow could be the 3rd day. So I gotta write this one down. That being said, wants to take a look at Microsoft, MSFT. If you didn't know, Microsoft is one of those companies that has consistency of profitability over 2 decades. Every year, higher and higher profits. However, not quite right time to buy because she's at the new bottom. Okay? At 380, jumps up to 415, drops down to 356. Up, down, looking for a new bottom. Once we find it, it might be a good sign. Just don't know. Just don't know. What are you guys talking about? Ooh, AVGO. Let's take a look at that one. AVGO, Broadcom. Ooh, not this week. Sorry. Here's the top, 418. Dropped down to 300. What's going on? No, I like AVGO, but she's just going and trading. They call it channeling. It's staying between 310 and 350, just going sideways. We just broke down below it. It's either going to make it or it's not. So what else do we have down here? Okay, clueless. You got to give me the ticker symbol. You're welcome. Kenny, how about Intel? Ooh, I like Intel. INTC. Not this week, though. See, look at that. Here's your bottom, shoots up, back down, back up, back down. Kind of trading sideways also. My music. Hey, James, how's it going? Appreciate you. Need to talk about how you hedge this strategy. You got to give me a little bit more to go on than that. Menu button doesn't work on the mobile. I'll have to talk to Jacob about that one because the internet technology is not my thing. Now, trading, yeah, I can trade good, and I can get on other things. Okay, Lorenzo, Lyft has not been around 20 years, and I don't even think they have dividends yet. So Lyft, for me, is going to be a no, Lorenzo. LYFT. Yeah, and it keeps dropping. 1286, the 13s are going for 46, which is over 3%, but I wouldn't buy it because it's dropping. SPX, Albert, why do you want SPX? I think you're doing that just to be a smartass. Mike, great question. Same situation like most at the moment. Mike, not quite sure. My gush calls have been the only thing printing. Okay. Stefan, TKO. What the hell is TKO? TKO. TKO group. Yeah, no. You're the first one to ask about a monthly. I don't do monthlies. ODT SPX. Yeah, Albert, I don't do that. Sorry. Thank you, Lorenzo. Thank you, Lorenzo. Once is enough. Lorenzo, once is enough. Oh, righty. G Scrub, Eli Lilly. Dropping like a rock, dude. Okay? If you like Eli Lilly, don't worry about it. Dropping. Wait for it to turn around. PJ Cajun, Pepsi, Dividend King. Ooh, look at that. I got to get out of my chair for this one, Cajun. I think you did that on purpose. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at this. Down, up, down, up, down, up. Okay. Here's your top. Here's your bottom. Look at this. That looks lovely. Let's zoom in. Hey, here's the top, 170. Drops down to 150. There's our 2 days right there. We wanted 2 days up from the bottom. There it is right there. Wednesday was the bottom. Thursday, higher high, higher low. Friday, higher high, closed higher. Right there, 153. The 152.50s, 350. That's more than 1%. Nice pick, Cajun. I got to write that one down, too. Oh, it's already written down. Huh. Good call. Do you use the Ichiku cloud? No. Why should I reference currency price only after 1985? Wrong conversation, dude. Sorry. Campbell Soup should go to zero. 3D printed meat. Yeah, don't get me started on that stuff. That is just a horrible idea from whichever way you look at it. Uh-oh, there's Albert again. Newbie alert, Nvidia. All right, he wants to know, so here we go. Nvidia. NVDA. All right, I gotta get up for this one. Wicked North. Albert Lamb, are you ready? This is why I don't like Nvidia. Hey, Dr. Corey, back in Jersey. What the hell's the matter with you, dude? It's cold in Jersey. Hey, Julie's up in Jersey. Should give her a call. I'll call Julie to have her call you. I might be late, though. Not quite sure. But she's flying back. Anyway, I'll talk to you later. All right, so Nvidia. Albert, you ready for this? Nvidia is $167.52. $100.67 per share. Okay? 167 per share. Do you see what the dividend is? 1 penny. So you're paying $167 for a 1 penny dividend. Hold on. I know what you're thinking. I'm not buying it for the dividend. Yeah, well, this is a dividend investing channel, so that's the way we're going to look at it. Now, what I'm going to do next is I'm going to go to the statistics, because the statistics are going to give me more detailed information on the stock itself. Stefan, hold on a second. Okay, so Nvidia, you ready? Okay, we know that the market cap is up and down. Okay, we started out 2025 2.9. Okay, we dropped to 2.6, jumped to 4.9, and now we're at 4.2. That's not going up, that's going down. It's not a good thing. Okay, hold on. All right. Are you ready? Revenue per share, $167 per share. Revenue that comes in is $8.86. That's it. Revenue per share, $8.86. Hold on, gets worse. The book value, $6.47. I'm not 100% sure you understand what book value is. Book value is basically yard sale prices. So if powers that be, the Supreme Court of the nation says you got to divest and pay back all your investors, guess what you're getting for your $167? $6.47. That's it. Because that's all it's worth on paper. That's it. The dividend is, I got to write this way, because I don't think you'll really appreciate it if I don't write it this way. Okay? Are you ready? Albert, you ready? The yield. Okay? The yield. That's the yield. 0.02. Explain to me in a manner in which I'll understand why you think a $167 stock. How much have you lost the past week? I've lost zero, Bill. Zero. I don't take losses. Last year, Bill, I had 4 losses. No. Last year I had 2 losses. The year before I had 4 losses. So far this year is 0 losses. Okay. So the yield on Nvidia, 0.02. That's the yield. Now I understand it's not a dividend stock. Well, it is a dividend stock, but not necessarily a real dividend stock because the profits are horrible. They give a 1 penny dividend on a $167 stock with a book value of $6.47. Revenue, $8. You don't lose when you don't sell. Thank you there, Stefan. All right, so no, I don't like Nvidia. The numbers are absolutely horrible. Now, it's a growth stock. It's not a dividend stock, so it's a different mentality for investing. How much are you down in the past week? That's a better question. But Bill, let me ask you a question. Hold on, I'm going to answer your question. All right, Bill, are you ready? Okay, I have an account with, whoops. Okay, 100,000. Right now, I am down 22%. You hear that, Bill? My account is down 22%. But what you're missing, Bill, is I honestly don't care how much I'm down. My major concern is how much do I bring in every week? So last year I brought in $4,000. Sorry, last week I brought in just a little under $4,000. Okay, that's 4% last week. So my account may be down 22%, but I brought in 4,000, which is 4% of my 100,000. So when I look at my account, it actually says something like 78, okay, rather than 100. Is it depressing? Yeah, it's a little depressing, but here's the thing. I own the shares and I can sell covered calls every single week. So even though I am down 22%, I still brought in $4,000, which is 4% of my total investment, even though my investment value is only $78,000. Does that make sense, Bill? So yeah, my value of my account is down, but I still own 2,700 shares of this company. I still own 2,200 shares of this company. I still own 1,000 shares of this company. It's not the value that I'm looking at. It's the consistency of the profit that comes in. What do you think about high dividend stocks like TSLY? Well, I have some TSLL. I don't have any TSLY. Let's go take a look at it for a second. TSLY. Well, that's going to be a freaking no for two reasons. Hold on a second. Let me get rid of this. Okay, now I don't like TSLY because it's a monthly. April, May, August, November, January. Yeah, no thank you. And it is dropping. Now TSLL, different story. TSLL, still a Tesla type stock, but it has weekly options. So the TSLY, I can only do it once a month. Doesn't work for me. TSLL is weekly, which allows me to do a weekly option every week. And look at where we are. Here's the top, here's the bottom, here's where it was, here's where it is, down, up, down. Okay, so let's zoom into that. Now, I do have TSLL at the 20. Okay? Did you hear me, Bill? I'm at 20 on TSLL, but now we're down to 11. That's an almost 50% drop. Am I panicking? No, because this week I'll be selling the 13s or the 1350s. Now the 13s are going for 25, which is more than 1% what I'm in at. Okay, if I'm in at 20, okay, and I'm selling the 13s, and the 13s are giving me 25, that's more than 1%, Bill. Even though my account is down 22%, I'm still bringing in more than 1.4% every single week. That's my goal. If I never, ever, ever sell at a loss and I continue to keep the shares, the issue I have with dividends is how they are taxed. Okay, the issue I have with people complaining about taxes on the dividends is you got your account held in the wrong way. If your account is held in your personal name, congratulations, you just volunteered to have the absolute highest taxation there is. If for 120 some odd bucks you file an LLC in a company that has corporate taxation at 0 or even less, or 10% or less, well, now your account is held in a corporation which is taxed differently. So, Bill, it's not the taxes you should be worried about, it's the lack of education in which you have available to you. So you can take your account, move it into a corporate account. Is that legal? Of course it is, if you do it legally. Okay? You can open up an account, okay, in a different state that has less or more favorable taxation in a corporation. Put it into a Roth IRA if you're into that, or put it into a trust, or put it into some kind of family foundation. There are many, 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 many ways to trade without paying taxes. If you choose to pay taxes, that's a different conversation. But you got to decide. If you're worried about taxes, someone is not telling you something. And the very first thing you should ask when you go to a tax preparer, how much taxes do you pay? So if your tax preparer pays taxes, you need to find a tax preparer that pays no taxes. It's as easy as that. Okay? You don't just go to anyone. I always end up withdrawing my Roth IRA contribution within a month. Okay. Black Swan event. What a market we have right now. I love it. I love the action. I do. Now, I've been trading for 30 years. It's not bad. It is what it is. Okay, so the longer you're in, okay, the more you get to see. No one should be pulling out. Yeah, I hear what you said. Thank you. Good night. Dr. Corey, have a nice night. Yeah, Black Swan, I hear you. I'm agreeing with you too. Analyze stuff, blah, blah, blah. Are you using qualified funds or NQ? I'm assuming NQ is non-qualified funds. Interesting. I'm trying to figure out why is that pertinent. Anyway, so that's my answer for TSLL and TSLY. Okay, what else do we have? Oh, wow, we're done. In your opinion, what are good entry points for longing Nvidia? None. I have no input about Nvidia whatsoever. Okay? All right, Black Swan. We did Nike earlier. Sony. That's going to be a no also. Okay, it's actually at the bottom of the year. The high of the year here, 31. The bottom right there, 1990. A year ago, we're at 25. We drop, shoot up, and boom, we're here. We're actually at the bottom of the year for Sony. Why is that? Okay, here's the top, here's the bottom. If you like Sony. Now, does Sony actually have a future as opposed to what we're seeing nowadays? Because years ago, they used to make cameras. Well, now you have your phone. Better camera quality than a Sony camera. Then they used to have DVD players. Well, now they have... The technology has changed so much, I don't think Sony's going to actually recover. But it's just my personal opinion. Oil trade covered calls in your Roth IRA. Yep, that's a good one. SFM. Uh-oh. Do I like SFM? I have no idea what that is. SFM. Sprouts Farmers Markets. Okay. No, only because I don't do monthlies. Sorry for Sprouts. Jim, we looked at Micron a little while ago. Where were you? Okay. Here's the top, 475. Now she's dropping right there, 357. By the way, the Black Swan event is happening. Yeah, but what company is it happening on? Navitas. You got to give me the ticker symbol, dude. That doesn't mean anything to me. Oh, we got 1 minute left. Thank you. You're welcome. DXYZ. What the hell is that? DXYZ. Destiny Tech. No options, no thank you. Market Legacy. How are you making money on premiums when your shares are too far away from your purchase price? Please, thank you, Invitus. Okay, wait. So, Market Legacy. Okay, interesting question. All right, Market Legacy. Don't want to have your shares called at a loss. Okay, I agree with you 100%. Market Legacy, you ready for this? All right, so TSLL. All right, I'm in a TSLL at 20. Okay, right there, way up there, not even on the chart anymore. Now it's down 50%, 1156. How am I making money? Well, great. Do you ever work the rut? The rut. Oh, you mean the Russell 2000? That's a different story. Okay, so back to your question. How can I make money if my stocks are down? All right, so I'm in at 25. Oh, 20, 25, what is that? Way up here, okay? It's currently down here. All right, so this week, call options, I'll be selling the 13s, and the 13s are going for 9 to 10, which is 0.5%, not a full 1%. But if I do next week's 13s, okay, next week's 13s are at 25, a full 1%. So I have a choice on what I want to do. You have a ton of experience. Thank you, Black Swan. All right, so anyway, I have a couple of choices. One, which is what I most likely end up doing, as soon as she finds the bottom and turns around, I will dollar cost average. Because at 11 and 25, my dollar cost average would be 17. Then I could sell the 13s or the 14s and still bring in extra money. It's always going to be the same questions. What did I buy it for? 25. Where's it at now? 1150. Where does it look like it's going? Still looking like it's going down. Okay, in that case, I'd sell the 1250s, which is paying 37, which is more than 1.5%. It's always going to be a numbers game. What did I buy it for? What did I sell? Where's it at now? Where does it look like it's going? And what should I do next? It's all relatively simple. It's adults that have a tendency to want to make it more complicated than it needs to be. What's the longest I've ever held onto a loser? I've never had a loser that I had an issue with. But the longest I've ever held on to anything was Walgreens, WBA. And that was 18 months. I held on to Walgreens, WBA, for 18 months because every single week it offered me more than 1%, and it wasn't a loser. Now, the longest I held on to a loser was 9 months, and that was Kimberly Clark. Okay? She dropped, and it took a while for it to go back up. If you're buying more shares at $13 cash average than selling options against what you just bought, yeah, but I wouldn't be selling it at 13. So if I'm buying it right now, it's currently at 1150. And then I sell the 13s against the 1150s, well, I'm still making 25, which is over 2% at that point. But the dollar cost average would make it a little over 1%. It's always going to be a numbers game. Okay, what did I buy? What did I sell? Where's it at? Where does it look like it's going? It needs to make sense. It either makes sense or it doesn't. Richard! Sorry, sir. Which market are you teaching on, please? I want to learn Forex. Wrong place, dude. I don't do Forex. Sorry. John Swanson, how you doing? Guess what? You're only working dividend stocks here. Right, absolutely. Now, the reason I'm only doing dividend stocks is they're predictable. Okay, that's it. They're predictable. They do the same thing year after year after year. So think about it. If you had a list of stocks that do the exact same thing or close to the exact same thing every single week, why not? Can we check DLR? What is DLR? DLR. Digital Realty. Okay. Whoops. Here's the top. Here's the bottom. Here's what it was. Here's where it is. Look at this. Drops, up, down, up, down. That's going to be a no. Simple. Okay. Here's the top. Down, up, down, up, down, up, down. So it's going down? No. Just doesn't make sense. Or trade covered calls in your Roth IRA. That makes sense. What about NVTS? NVTS. Navitas Semiconductors. Interesting. Not really going anywhere. Okay. Very slow upward trend. A little bit of a pullback here. Last 30 days. Up, down, up, down, up, down. So no to Nvidia's for this week. Sorry. There are other ways of giving money back to investors. Buybacks actually give you money. Yeah, less taxes. Yeah, I don't like buybacks. But you know what? It is what it is. I'm just showing what I do. That's it. All right, that being said, we're past 11 o'clock. We are done for the evening. You guys have a great night. Let's go. Let's go back to my favorite song. And we're done. Dive into the deep. It's in the world while the rest of us sleep. Who do we have over here? Mark, what's happening, Mark? Alexander, how you doing? Doug, what's going on? Just transfer. Ooh, nice. To answer the question, what would be a good entry point on Nvidia? I suggest book value at $6. I like that idea. Woohoo! All right, guys, have a great day. We'll do this all over again tomorrow. Have a good day, everyone. See you guys tomorrow morning. There's a day that I'm thinking. Everything's a question from this, guys. See you guys later. I'm usually on every night, 9 p.m. Eastern Standard Time. With the weekend.